What's up, you guys? Today we're going to be talking about Symbotic and Celsius, two companies I have invested in. So, Symbotic Investor Day, they outlaid quite a bold vision, but can they deliver on it? Symbotic recently hosted quite a compelling Investor Day presentation. I'll go over some of the audacious claims and goals that they stated, yet why I've also grown a little bit skeptical of the company due to three main factors, really. Now, we'll talk about Symbotic first, and then I'll get to Celsius, but I had to scour the internet to find the recording of the Symbotic Investor Day, which was only posted on Vimeo, which could constitute a fourth red flag here. I mean, next thing you're going to tell me Symbotic posts their content on eBaum's World. I mean, really? YouTube, X, come on, we got to get with the times here. I'll link the presentation at the end of this video if you're interested in watching the full thing for yourself and seeing what you think. But just a quick recap for Symbotic. If you don't know, it's a warehouse automation company. I've been covering it for 2 years on the channel here and investing in it. So they currently are up to 18 fully operational systems. They've got 37 additional ones in progress. Now, all of this is with only 9 total customers, which the company continues to plan. They plan to continue to add 1 to 2 total customers to that growing list each year. So here's a map you guys can see showing what the US will look like when they've completed their entire backlog of current orders stemming from only the 9 customers that I'll show you guys in the next picture. But this map also excludes any potential systems they may get through their Greenbox initiative, which is a joint venture with SoftBank, to essentially bring a warehouse as a service model to the market and make Symbotic more accessible to smaller companies. Because right now, here's a list of their customers. It's all big box retailers. We got Walmart, CNS Wholesale Grocers, Target, Giant Tiger, Advanced Food Storage, can't read that one, Unfi, Albertsons, and then they also just added this Southern Wine and Glazers. That was their newest customer. So, we're looking at huge companies here, right? So they're hoping to open this up to some smaller players is the idea with the Greenbox initiative, where you might have small companies that don't need quite a whole warehouse or couldn't afford to, get a whole warehouse done. They don't have hundreds of millions of dollars lying around, but they could share capacity, almost like AWS for Amazon. It's like you pay as you go for the amount of storage you need. They're flexible in that you can reduce or increase, as your company's growing or shrinking or, going through hard times. Makes a lot of sense. Basically bringing AWS to the warehouse. Now, during the Investor Day presentation, CEO Rick Cohen stated, "We are Amazon selling books right now," implying that there's just so many use cases for Symbotic that they haven't even figured out yet. Amazon obviously started out selling only books, and no one back then would have believed it was possible to become the company we know today. He also made claims that they're like the iOS or the Apple operating system of the industry through the Symbot platform they've built, which is capable of automating the movement of practically anything. Here's a direct quote. Cohen stated, "We're so much lower cost at moving boxes than any other person-based or automation-based system anywhere in the world." These are quite the claims, quite the bold claims, which normally this kind of stuff makes alarm bells go off in my head when I see this, like we're the next Amazon type talk. This wasn't quite that, but it was pretty close. With these claims, you might be thinking right now, why don't I own this company? I'll get to some of my concerns, before you think about pulling the trigger in a second here. And then regarding the company's growth trajectory, Cohen stated, "This will be the slowest sales year that this company has for the next 50 years. There's just so much demand for what we're doing." Now, no company can grow 50% for 50 years, maybe a bit of hyperbole, but maybe over the next few years, they obviously already have this huge backlog and, maybe there's more interest out there we don't know about yet. I can assure you no company is growing 50% for 50 years. Maybe they could do it the next few years. They have been doing it for the last few years, growing at insanely high growth rates of over 100%. And then the most recent quarter was around 50%. So the presentation gave quite a few compelling reasons why this could be an attractive long-term investment. The company has a lot of patents. As you can see in the chart here, they have 401 issued patents and 203 pending. That's been steadily increasing each year here, up from 419 back in 2021 or fiscal year 2021, which should give some level of insulation from the competition. But Elon Musk has famously said patents are for the weak, right? At the end of the day, all this does is slow down innovation. And if you're truly like a super innovative company, you're just that far ahead, you shouldn't really need a lot of patents, but it can definitely protect against competitors. Let's look at some of the big problems with the company now. So I already mentioned in my last video how the first green box customer, being Rick Cohen's other company, CNS Wholesale Grocers, is probably not the best look. But you could argue it. You could say that they're using it as a to prove the use case out to get other people interested. But here are three bigger issues to me. So despite all the incredible projections that they keep talking about, and how great the company is, how we're Amazon selling books right now, the company continues to spout this sort of rhetoric. Yet I could not find a single insider buy going all the way back through July 27 of 2023. Not a single buy. Now, obviously, there's stock-based comp that people are getting, but if you're the Amazon selling books right now, wouldn't you be trying to gobble up as many of these shares as you could? So while there hasn't been any buying, which is always a surefire tell, people only buy when executives or management only buy their stock when they think it, for one reason, they think it's going up. But there's been plenty of insider selling. And again, you can sell for a number of reasons, but you only buy for one. So here's just the most recent filings. This chart spanned pages and pages with not a single insider buy. Again, if Symbotic truly is in this Amazon selling books stage, wouldn't insiders be buying as much as possible? Sure, there's stock-based compensation and insiders can sell for a number of reasons. They usually only buy the stock for one reason. Like I said, they think it's going up. So they seem to keep pumping the stock quarter after quarter with these crazy projections, only to dump their own holdings. I'm just not, do as I say, not as I do, is the vibe I'm getting here. The second major issue is the company is diluting shareholders like a drunken sailor. The number of shares outstanding has nearly doubled in the past year, from 58 million to 93 million shares in less than 12 months. Of course, debt is expensive right now. This is a cheaper way to raise capital and makes sense, to do when your stock is at a high. But seriously, that seems excessive. And the third major issue is competition. Despite the company, Symbotic, implying that they're the best at moving boxes of anyone in the world, the warehouse automation space sure seems home to a lot of players. In a list of the top 20 worldwide materials handling systems suppliers listed below, as of 2022, Symbotic did not even crack the top 10. They were number 18 on this list out of 20 by revenue. And even if I went by their 2023 revenue and assumed that nobody on this list grew, Symbotic would still not even crack the top 10. In 2023, they had revenue of just under $1.2 billion, which would put them right below Witron over here. Now, this doesn't even factor in someone like Amazon, who probably is the best warehouse robotic system on Earth today, largely thanks to their acquisition of Kiva Robotics back in 2012. But luckily for the rest of the industry, Amazon's not interested in sharing for now. However, on Amazon's recent earnings call, there was a question about Amazon's supply chain, which has the potential to one day be a sort of AWS for logistics globally. So Amazon is always a looming threat, but this was especially eerie for the long-term future of the industry to hear that they are, looking into it, maybe kind of, doing logistics for other companies. I don't expect that this is something we're going to see anytime soon, but it's definitely worth keeping an eye on. So, in the meantime, Symbotic has plenty of patents. They claim to be the industry leader, but they also seem to have plenty of competition. Now, in the past, the company has stated that Symbotic is the only truly, end-to-end solution on the market, whereas some of these other companies maybe provide only, point solutions or able to automate parts of your operation, but not door-to-door like Symbotic can. And, I'm going to definitely do some more research on competition in the coming weeks. If you guys have any insights, please let us know in the comments down below, but hope to have a more definitive answer on the competition, because that's really my biggest concern right now with the company, whether it is legitimate or not. There seems to be a lot of other companies doing this. And of course, if Symbotic is able to do it successfully and there's not, they're going to attract a lot of competitors, potentially even companies like Amazon long-term. Now, I'm always getting comments like this. Who knows if these people are legit? I give them the benefit of the doubt, but I got a comment on my last Symbotic video from someone who said, I worked with Rick Cohen as EVP of sales for 8 years. He is a genius in food wholesaling. He's also the most ethical executive I've ever met. He doesn't know how to lose money. I witnessed over and over again his ability to look at the long-term picture, which may have had short-term losses to establish a long-term contract, with that resulting in double-digit growth. I have zero doubts at his future and his success with Symbotic. So sounds great. People are always telling me what I want to hear with this company, especially from inside the company. Like I said, again, I can't verify this, but I give these people the benefit of the doubt, take it with a grain of salt. But, people do at the company seem to speak very highly of Rick Cohen, his leadership. I get it. I could see it. It seems like they really have a long-term view of things, which I like to see that when I'm investing in a company, that we're not just focusing on short-term quarterly nonsense. So seems like there's a long-term vision. I'm definitely rooting for Symbotic, though this company seems to attract a wide hatred across financial Twitter or X and YouTube. There's a lot of skepticism, but the company does seem to be doing some fascinating work. But when they keep talking about their fascinating work and then management unloads their shares en masse and simultaneously is diluting shareholders into oblivion, really, with no end in sight, it's not exactly inspiring confidence. So let me know what you guys think of Symbotic down below, and let's move to Celsius. All right, so on to Celsius. Celsius energy drink company, was one of my best performers in 2024. The stock was up around 57% when I sold out. I got in around the 60s, sold out at $92 a share. Honestly, it was just lucky timing. I just kind of felt like the stock had run way more than I expected very quickly, and it was a good time to get out. And then looking at the last week here, what's it down? It turned out to be impeccable timing, really. It's all the way down to $78. We'll get to a few of the reasons of what's going on there. But yeah, the stock's down 15% this week alone, but it is starting to get more attractive again. So let's look at Celsius. For today, I'll really just focus on their Q1 earnings and what I think of the stock at, the current prices. So in Q1, Celsius alone contributed 47% of the growth for the entire energy drink category versus the prior year. And they're up to 11.5% market share of the entire energy drink category. This number has been steadily increasing too, up from 10.5% in Q4 of 2023 and 7.5% in Q1 of last year. So Celsius has solidly cemented itself in third place behind Monster and Red Bull. And notably, they're the first energy drink to reach 10% share in over a decade in what has historically been this duopolistic market where you've just got Red Bull and Monster really dominating the lion's share, with no one else really able to break above that 10% threshold. And you kind of see the numbers here. It's another great quarter, although growth is definitely slowing down, right? I think this is becoming a long-term gain. Again, this is why I got out. It just seemed like it had run a little bit too much short-term. So revenue's coming down, the growth, 37% growth. That's still fantastic year over year. But this is just what happens. You have these extraordinary growth rates. Your year over year comparisons are going to it's going to be very difficult to grow 50% and then grow, 50% again the next year and keep doing that. It's going to level out at a more sustainable level. So the growth probably is slowing down. This is part of the reason why the stock, I think, has been hit so hard. I do think there's a huge opportunity for them internationally. They're really just beginning to tap into that market. As you can see, that grew 43%, but, very small portion of their revenue, only 16 million of their total of 355 million, 339 million coming from North America in Q1 2024. So Celsius gaining shelf space everywhere I look. It can be found near checkout counters. Both of these things have proven psychological effects to positively impact consumers' decisions to buy, as well as increase, impulse purchases. 12% of their sales through their partnership with Pepsi came from the food service channel. So this is a big opportunity, as energy drinks have not historically been popular pairings with meals. So I think that's a huge differentiator. You don't really see people sitting in Jersey Mike's drinking a Monster or Red Bull with their sandwich, but you're going to see them drinking a Celsius. I see people drinking them at the gym all the time. Like I said, the company's international rollout, there's a lot of opportunity there. It's really in its infancy, but it's showing tremendous growth, up 42%. And the company just launched in Canada, where it has already achieved 5.5% market share in the energy category. So again, these rollouts take time. I think this is a multi-year thing that you're just going to have to be patient with. I don't think it's going to happen overnight, right? It takes time to get these partnerships, to get the logistics all figured out. Having Pepsi in their corner definitely helps, but I think it's a long game that they're playing now. Definitely tremendous opportunity when it comes to the international market. Just to give you an idea, in Q4 of 2023, 37% of Monster Energy's sales were outside the US, and its international growth is actually outpacing its growth in the US, its growth rate. So what is Celsius doing good? They're definitely doing a great job of cementing themselves as the premier, top-of-mind, functional energy brand through effective marketing at major events like Coachella. They have a global partnership with Ferrari at the Formula One Miami Grand Prix, and Celsius was even featured in a recent Saturday Night Live opening skit. As you can see here, Sleepy Joe Byron said, "I just pounded a Celsius. Let's do this." So that's pretty big. If you're getting on the SNL opening skit, they've definitely executed to perfection with all the influencers and celebrity partnerships and all that kind of stuff they've done. Very popular on TikTok. Definitely been a huge part of their success. And on Amazon, Celsius increased their sales 30% year over year to $28 million for the first quarter. And this gives them a 20.2% share of energy drink sales on Amazon, to Monster's 20% and Red Bull's 12.3%. That was as of the 12 weeks ending March 30. So it remains the number one energy drink on Amazon by dollar amount, which is definitely a big deal, right? They have surpassed Monster and Red Bull when it comes to that specific market. And obviously Amazon is a great place to be. So it was a great quarter for Celsius. Their year-over-year comparisons were fantastic. However, if we look at the chart here, quarter over quarter, you are starting to see growth slow and decline, sequentially. Again, as I mentioned earlier, it's impossible to keep this up year after year, growing 50%. It's bound to happen eventually. Q4 2023, they had revenue of $347 million. Q1 2024 is $355 million. So revenue is flattening. It's down from Q3. This was inevitable. I don't think it's a big deal. Again, I think we're moving into the point where, this becomes a long-term play here. It's just not going to happen overnight. Now, here's a chart before the crash that I had actually thrown in my Substack article on Celsius from a few weeks ago. You guys can subscribe to that for free. Link down below. It's in the description, and I'll post it in the pinned comment as well. Definitely check out the Substack, free articles. And then we've also got a community access tier if you're interested in that, where we're doing weekly private calls. I'm sharing all my stock and options trades, which worked out splendidly in the case of Celsius. I literally said this in my article. This was dated May 17. So basically right before all this calamity, the stock was at $92. And I wrote on Substack, as you can see in the chart below, the stock is forming a double top and looks to have potentially peaked again and is already starting to head down. There's definitely a lot more risk at present value than potential reward, as the stock has run up very high, very fast. Wouldn't you know, I promise you, I don't have a crystal ball. I got a little lucky here, but the stock has absolutely tanked. It's all the way down to like $78 now, just in the last couple of weeks. So let's look at the risks. And I had outlined these risks. I think these are also part of why the stock is going down. I think primarily it's the growth slowing down, but there's three risks emerging. You've got these stories coming out now about the potential health risks of energy drinks, including liver damage. I'm sure it's nothing. Seems nothing is safe these days, but I'm being cautious with this. You really can't win. Everything is killing us. I thought Fairlife shakes were healthy. I've been drinking those all the time. Turns out they probably just gave me a bunch of plastic in my balls. If you guys watch the latest All In podcast, check that out. They'll tell you about that. Very frightening. Everything you eat kills you slowly. We got plastic in our bodies. It's just insane. So you can't win. It's ridiculous. Whatever. But again, hopefully this blows over. I think they were talking about if you're drinking like more than 2 of these a day, and who knows, nothing's good for you. You really cannot win. Like it's really unfortunate. Hopefully, this can be something we improve, but whatever. Second, Celsius just filed to issue more shares. So again, like with Symbotic, they have that in common. It's smart to issue shares when your stock price is at a high, and it could add to the company's cash balance that they could really probably be very useful for them to put toward this international expansion, but it's going to dilute shareholders. Now, the third issue, when all these investing sites you see here, a couple screenshots of some articles from a while ago, this is hilarious, the timing, because again, I'm pulling these pictures from an article I wrote weeks ago, and the ensuing crash has now followed. I said, when all these investing sites are pumping the stock, which they had begun to, it's a great sign to run for the hills. And wouldn't you know, as soon as Investor Business Daily is talking about Celsius stock climbing, earnings expected to grow 72%, CNBC, this rallying energy drink stock set to break out above 100, wouldn't you know, within a week or two, this stock gets destroyed. This happens over and over and over again. So it's funny. I had a good call on that. Again, not to toot my own horn too much. I'm not psychic, but once in a while, you're investing long enough, you start to see, how the game's played here and pick up on some trends. But anyway, investing, it's all about managing risk. There sure seemed to be a lot more risk than reward left when Celsius was at that $92 price. So therefore, I had stated I wasn't buying then. But now where I'm looking at it at 78, it's getting more attractive. So I don't own Celsius shares right now, but I do have some options open. I'll definitely be looking to get back in, possibly at a lower price. But again, like I said, you guys can find out what I'm buying and when if you sign up for the community tier. We've got this great community going. It's home to some excellent stock and real estate investors. We're doing weekly group calls. We got people in there from all backgrounds, hedge funds, rental property owners, sales, and much more. So whether you're brand new to investing or advanced, consider joining the community. You can figure all that out in the link to the Substack below. Again, definitely check out the Substack, get free articles into your inbox from that. Let me know what you guys think in the comments below. I want to hear your thoughts on Celsius and Symbotic. And don't forget to subscribe for more content. This is Vinny from the Investment Club. I'll see you guys next time.